You twist the key in a quiet Missouri neighborhood, and the porch light flickers like it's second-guessing you. The wind has teeth tonight, scraping dead leaves down the curb in little spirals, and the clouds hang low, heavy, slate-colored, pressing the whole street into a colder shade of reality. You step closer to the window, and instead of warmth, you see it. A price-reduced sign bent slightly forward, as if it's already bowing to defeat. The air smells like wet asphalt and old lumber, and somewhere nearby a gutter rattles. One more loose piece on a house that can't afford another repair. This is the 2026 housing market in Missouri. Not a single crash, but a slow unraveling. The kind where sellers keep cutting, buyers keep waiting, and the numbers don't lie even when the listing photos do. Welcome back to Market Pressure. Subscribe now, because we're counting down the 10 Missouri cities where the housing market is breaking. And the closer we get to number 1, the more brutal this gets. Number 10. Cape Girardeau, Missouri. You roll into Cape Girardeau with the Mississippi River nearby, steel gray under winter light, and brick storefronts that still remember busier decades. This has always felt like a steady, practical market, affordable, anchored, dependable. But in 2026, that reputation is cracking. Back at the pandemic-era peak in 2022, demand surged as buyers chased space and lower prices, pushing values higher and tightening supply. Cape Girardeau's appeal was simple: a livable city with healthcare and education nearby, and homes that still felt within reach. Now, the data turns concerning. Redfin shows a median sale price of $197,000, down 1.5% year-over-year. Redfin. The sale-to-list ratio sits near 97.0%, signaling buyers are negotiating again. Redfin. Homes are taking about 27 days to sell, and closed sales were 47 in the latest month, up 11.9%. But that rise masks shaky pricing power. Redfin. Zillow's home value measure shows $211,753 as the average value, up 4.2% annually. An awkward split between asking hopes and closing reality. Zillow. When values and sales prices diverge, it's usually the first hint of a turn. What's driving it? Insurance pressure and storm risk in the region, plus affordability fatigue as rates stay high and buyers refuse to overpay. As you leave Cape behind, the market doesn't collapse. It loosens, like a knot coming undone. The outlook is cautious. Stabilization only after more sellers accept the new math. Number 9. Springfield, Missouri. You enter Springfield under a wide Ozark sky, where highways braid around strip malls and older neighborhoods sit in the shadow of new builds. For years, this area was quietly hot, a place people believed would stay competitive no matter what. Now, the cracks are visible. Springfield's modern peak came in 2022, when remote work and cheap borrowing pulled buyers inland. It was known for value, a market where you could still trade rent for ownership and feel like you won. In 2026, the shift is troubling. Redfin reports a median sale price of $215,100, up 5.0% year-over-year. But that headline hides softer leverage. The average home sells about 6% below list in recent trends, and competition is changing shape. Redfin. Homes are taking roughly 29 days to sell, and sales were 187 in the latest month. Redfin. The price per square foot is around $155, up sharply year-over-year, meaning buyers are paying more for less house, a classic late-cycle squeeze. Redfin. Zillow places the average value at $235,180, up 1.0% annually, with homes going pending in about 27 days. Zillow. Meanwhile, local MLS statistics show the greater Springfield area. Median sale price at $284,950, with average days on market at 46, both drifting the wrong direction for sellers who need speed. Greater Springfield Board of Realtors. Contributing factors are tightening affordability and payment shock, plus new supply pressure around the metro. As you drive out, Springfield feels like a market still standing, but hemorrhaging momentum. The verdict: price growth becomes a mirage if days on market keeps rising. Number 8. Jefferson City, Missouri. You come into Jefferson City with the Capitol Dome catching pale light above the river, and at first it feels insulated. Government jobs, stable paychecks, a market that shouldn't break. That's exactly why the early warning signs matter. The run-up peaked around 2022, when low rates pushed even stable markets into overdrive. Jefferson City benefited from buyers looking for predictability, places that don't swing wildly. Now, the numbers are more troubling than they look. Redfin shows a median sale price of $249,900, essentially flat year over year, a stall that often precedes a reset Redfin. Homes sell in about 15 days, down from 25. Fast, yes, but speed can reflect thin inventory rather than strength Redfin. Sales volume slipped, 48 homes sold, down from 61 Redfin. Zillow shows average value at $262,284, up 6.0% annually, with homes pending in about 12 days Zillow. When values rise, but closings flatten, sellers lean on optimism while buyers lean on math. Statewide, Redfin shows Missouri's median at $275,800 with 45 days median DOM, an environment that's not forgiving overpriced listings Redfin. The drivers here are affordability stress and rising carrying costs. Taxes and insurance don't care that the city is stable. As you leave Jefferson City behind, the market feels like a bridge with hairline cracks. Still passable but quietly weakening. Outlook: stagnant pricing until incomes catch up. Number 7. St. Joseph, Missouri. St. Joseph greets you with old industrial bones and Big Sky Plains energy, a city that's always been priced as affordable America. For years, investors loved that story. In 2026, that story is starting to unravel. The peak frenzy hit around 2022, when cheap money pushed buyers and small investors into overlooked markets. St. Joseph benefited from spillover demand and the promise of low entry prices. Now it's getting alarming. Redfin shows a median sale price of $170,000, up 13.3% year over year. But that growth comes with stress signals. Homes still sell around 33 days, and the market is only somewhat competitive, not tight Redfin. Zillow's value metric shows $174,283 average value, up 7.2% annually, with pending time around 23 days Zillow. Redfin's statewide data shows 24,543 homes for sale, up 7.9%, and a sale-to-list ratio of 98.8%, meaning Missouri buyers are no longer paying whatever sellers demand Redfin. When a low-price market loses bidding power, investor appetite cools fast. And when investors pull back, liquidity evaporates. The biggest contributors are wage constraints, aging housing stock with repair costs, and higher insurance premiums across Missouri's storm-prone risk profile bank rate. As you pull away from St. Joe, it feels like a market propped up by cheap that isn't cheap anymore. Outlook: sharp volatility as buyers resist rising payments. Number 6. Joplin, Missouri. Joplin feels like a crossroads: trucks, highways, and a working city that rebuilt and kept moving. It was easy to believe this market would stay resilient, but resilience doesn't stop gravity. The surge crested around 2022, when affordability seekers and investors chased secondary markets. Joplin's draw was straightforward: lower prices, steady demand, and the belief that someone will always buy here. Now, the data is alarming. Zillow shows the average home value around $196,951, up just 0.8% year over year, nearly flat in a period where sellers expect more Zillow. Redfin's latest market snapshot places the median sale price near $173,900, with homes selling in about 22 days in the period reported Redfin. Redfin also shows a sale-to-list ratio around 95.2% in the captured data, meaning discounts are real, not theoretical Redfin. When sellers consistently accept 4-5% under list, the market is already bending. Overlay that with Missouri's broader pattern of rising inventory, and longer selling times. And you get a market where confidence drains first, then prices. Contributing factors include affordability pressure, insurance costs rising across the region, and investor slowdown when discounting becomes routine. As you leave Joplin, the market feels like a rope fraying strand by strand. Outlook: softening prices as seller expectations finally break. If you're finding this data-driven analysis useful, like the video and comment which city surprises you most. Your engagement helps us continue this research. Number 5. Raytown, Missouri. Raytown sits close to Kansas City, with familiar mid-century homes and commuter rhythms. It used to feel like a safe, modest option, a place where affordability protected you. In 2026, affordability isn't enough. The market's peak heat was around 2022, when metro spillover pushed buyers outward. Raytown benefited from proximity, close enough to KC jobs, cheap enough to feel smart. Now it's brutal. Redfin shows a median sale price of $201,250, down 3.7% year-over-year. Redfin. The median price per square foot is $125, down 19.0%, a sharp signal of real value compression. Redfin. Homes take about 33 days to sell, better than last year's 52, but that can also mean sellers are cutting to move product. Redfin. Redfin shows 26.0% of homes with price drops, meaning more than 1 in 4 listings is blinking first. Redfin. Zillow's average value reads $195,950, essentially flat year-over-year, confirming stagnation. Zillow. When prices fall while price cuts rise, the market isn't cooling, it's crumbling. The drivers are payment shock, investor pullback, and rising carrying costs that punish entry-level owners the hardest. As you leave Raytown behind, the market feels like plaster cracking under pressure. Outlook: continued weakness until price to income reality resets. Number 4. Independence, Missouri. You come into Independence with wide roads and historic pride, but the housing mood is different now, tense, watchful. This market rode metro demand for years. Now it's starting to look like a trap for overconfident sellers. Independence peaked around 2022, when Kansas City demand spilled outward and buyers priced out of nicer suburbs chased anything livable. The growth story was simple: proximity plus affordability equals permanent demand. In 2026, it's getting brutal. Redfin reports a median sale price of $220,000, up 8.6% year-over-year, but the market is riddled with concessions. Redfin shows 25.8% of homes with price drops. Again, about 1 in 4 listings retreating. Redfin. Homes take about 42 days to sell, up from 35, which signals buyer hesitation. Redfin. Price per square foot is about $130, down 1.9%, meaning the higher price headline can be mix-driven, not strength-driven. Redfin. Zillow shows average value at $199,411, up 2.0%, much slower than the Redfin sale price growth suggests. Another split that often precedes repricing. Zillow. The drivers are affordability compression and rising insurance costs across the state's storm exposure bank rate. As you exit Independence, the market feels like a floor that looks solid, until you step and hear it creak. Outlook: more price cuts before balance returns. Number 3. St. Louis, Missouri. St. Louis hits you with brick, history, and a skyline that's seen cycles before. For years, people called it undervalued, a place where you could still buy real shelter. But 2026 is exposing the downside. When confidence breaks, it breaks fast. The market's modern peak came in 2022, fueled by cheap debt and buyers fleeing coastal prices. St. Louis became a value play, especially for investors betting on rents and appreciation catching up. Now it's devastatingly conflicted. Redfin shows a median sale price of $235,000, up 6.8% year-over-year, but the sale-to-list ratio is only 97.6%, meaning deals are closing under ask. Redfin. Homes sell in about 36 days, slightly slower than last year. Redfin. Redfin notes average homes sell for about 2% below list in recent competitive trends. Redfin. Zillow shows a median sale price around $214,650, with about 1,010 homes for sale inventory in its snapshot, signaling plentiful choice and uneven demand. Zillow. Local St. Louis realtors data shows the median sales price for residential homes at $300,000, up 9.1%. But condos or townhomes show weakness, down 11.4%. A split market under strain. St. Louis realtors are. Split markets are unstable markets. Contributing factors include property cost burdens, aging stock repair costs, and insurance increases tied to Missouri's storm and flood risks. Bank rate. As you leave St. Louis, the market feels like a historic building with hidden water damage. Beautiful from the street, but rotting in the walls. Outlook: volatility and uneven. Declines by neighborhood. Number 2, Kansas City, Missouri. Kansas City looks strong at first. Cranes, new restaurants, big league confidence. But the housing market here is a pressure cooker. And in 2026, that pressure is turning destructive. Because when a hot market slows, the reversal is violent. The peak was around 2022, when tech-adjacent jobs, relocations, and cheap borrowing pushed demand into overdrive. Kansas City became a magnet for buyers escaping more expensive metros. Now it's devastating. Redfin reports a median sale price of $275,000 in the latest snapshot we pulled, with homes taking about 62 days to sell, nearly doubling from 36 days in the comparative period shown. Redfin. That's not cooling. That's a behavioral shift. Redfin also shows 20.5% of homes with price drops, meaning 1 out of 5 sellers is already folding Redfin. In Redfin's competitive notes, homes are selling about 2% below list and taking around 45 days to go pending. In recent trends: slower, weaker, more negotiable. Redfin. Even when prices appear up year over year, time is the real tell. Buyers are resisting. And once resistance sets in, inventory builds, and the entire market tone collapses. The drivers are affordability shock, higher mortgage rates, and the evaporation of bidding war psychology, especially when a fifth of listings cut price. As you drive out of Kansas City, the market feels like a dam starting to leak, tiny cracks that become a rush. Outlook: sharp repricing if DOM keeps climbing. Number 1, Lee's Summit, Missouri. You arrive in Lee's Summit and it still looks like the dream. Clean streets, polished storefronts, manicured subdivisions. The kind of place that marketed itself as safe forever. But in 2026, that safety is an illusion, and the market's breaking point is psychological. The boom peaked in 2022, when suburban demand exploded and buyers paid premiums for schools, space, and stability. Lee's Summit became crown jewel for move-up buyers. Now it's catastrophic because the pressure is inside the numbers. Redfin shows a median sale price of $425,000, up 9.0% year over year in the snapshot we pulled. But the hidden warning is this: 26.6% of homes have price drops. And that share was up 7.6 points year over year. Redfin. That's more than 1 in 4 sellers cutting, in a market that's supposed to be bulletproof. Homes sell fast, around 14 days in the reported period, but speed plus price cuts means sellers are racing each other downward. Redfin. When buyers sense that desperation, they wait. When they wait, the next wave of listings has to undercut the last. That's how strong markets collapse. Not in 1 month, but in a chain reaction of reduced expectations. Contributing factors include high payment shock at this price tier, property tax burden in higher value suburbs, and insurance costs rising statewide. Bank rate. As you leave Lee's Summit behind, the market feels like glass under stress, still shining, but one sharp hit away from shattering. Outlook: the most dramatic reset risk in this countdown. The countdown tells one story. Missouri isn't experiencing one clean crash. It's watching pockets of the market unravel at different speeds, driven by affordability, higher rates, and sellers who can't accept that 2022 is gone. Across these cities, price drops, longer selling times, and weakening leverage show a slow motion shift from confidence to capitulation. Redfin. If you're buying, you need patience and ruthless underwriting. If you're selling, you need realism, because the market is punishing denial. Subscribe to Market Pressure and comment the city you think breaks next, because in 2026, the warning signs aren't subtle anymore. This is Market Pressure. See you in the next breakdown.